Thanks very much, everyone, for joining us there this evening for our webinar on later life lending. And we're delighted to do this in association with Spry Finance. First of all, Oates Breheny Group, who are we? For those who don't know us, we're one of Ireland's longest serving mortgage brokers. And we partner with all major lenders. We have direct access to all 9 major lenders in the broker market. And we're delighted. And again, there's only less than 5% of brokers in the country that can say that, which we're proud of. And we're also delighted to be a broker partner for Spry Finance, who are one of our 9 lenders. Again, being a broker partner for Spry, there's only 4 brokers in the country that can say that. And basically what that means is that apart from giving independent financial advice across the whole all market segments, and impartial advice to clients, if in later life lending, if this is a product for you, with Spry Finance, we can take you from start to finish, from application to funds issue and beyond. Anyone you deal with here will be a qualified financial advisor with plenty of years experience. And again, as I always say, we try to make it hard not to contact us, in the sense that we're available directly online, email, Zoom, into us if you're around locally. And again, we've added a mortgage booking system to our website recently, which means you can jump on there, book a time and a day that suits you, the advisor that you wish to meet. And also, again, if you want to do that by Zoom or call or call into us. So we try to make it as easy as possible to contact us. And again, as always, we don't charge fees. We just provide market-based advice, giving you access to all 9 major lenders, as I mentioned already. Again, the format tonight really is talking about later life lending. Over the last couple of years, access to finance for clients who are over, particularly over 60, 70, even 80, has improved slightly. There's 1 or 2 new lenders in the market that will lend beyond the normal retirement age of maybe 65 or 70. That will go up to age 75 to 80. But tonight's webinar will discuss Spry Finance. They're the major later life lender in the country, and they have a unique product. And I'm delighted to welcome to David Brady, the head of business development, to the webinar this evening.
Thanks very much, Shane. Appreciate you having me on to talk a little bit about Spry and our products.
That's great. Listen, thanks very much for joining us this evening as well. I suppose the key things I want to kind of cover off this evening, and hopefully the webinar will go on for about 30 minutes maximum. And, trying to cover off, number 1, who are Spry Finance? Number 2, what's the trends you see in the market at the moment? Who's taking it out? What are they using the money for? Is it a growing market? And 3, then around the product, who can take out a Spry Finance, and what's the ins and outs of that? At the end, we'll have a questions and answers section. I have a number of questions in already, which we can cover off. But anyone else who wants to ask a question, just go into the question box there, put in your question. It's totally anonymous. Nobody will know who's asking that question either. Be sure of that. And we'll try and answer anything that you want to know about later life lending this evening. So first of all, Dave, who are Spry Finance?
Thanks very much, Shane. So Spry Finance are a non-bank lender. We are a regulated retail credit firm for the central bank, 100% Irish owned, operated in Ireland, headquartered in Ireland, and we have been operating as Ireland's sole provider of later life lending products since 2006. The market for later life lending products is growing. Since we've kind of relaunched our products in 2021, we've seen growth year on year, generally just driven by the demographics and the needs of the market. So Ireland is very much a growing population, but an aging one as well. We have the longest life expectancy in Europe, believe it or not, and over 65s in Ireland, that age demographic is the fastest growing age demographic in Ireland. If we look at the 2016 census, there was just over 600,000 people in Ireland age 65 or over. And by the end of this decade, we'd expect that to be over 1 million people. So it really is, in terms of the need of what's there, a growing population, everybody's living longer, and in most cases, the most significant asset that people have is their home. And it's having a huge amount of value tied up in that home, and people are looking at solutions around accessing it. So a lifetime mortgage allows customers to release equity from the value of their home. And you can see here some of the trends that we see, or the main uses of the product. They're very varied in terms of what people use it for, but typically they kind of break down into these kind of categories. The most common what we see is that people looking to kind of support their pension or have a bit of a cash fund for emergencies. They might say, look, pension from a day-to-day point of view is fine, but actually, if I wanted to go visit the kids who are up in a different country, or go to a niece or nephew's wedding in a foreign country, I mightn't have the funds to do it. If the car went, that's a larger expense. Something happened with the boiler, et cetera, et cetera. So just that little bit of comfort around some of those bigger expenses and supporting a pension that's there. As we've seen that the pension coverage of yesterday isn't exactly covering the future costs, because we're all living a little bit longer. Other big uses of it would be home improvements. You would see a lot of that. So again, our customers tend to live in more established areas, older properties, and they're looking for energy efficiency, etc., looking to improve their houses, and accessing appropriate credit for their age requirements and where they're at in life in terms of repayment capacity is something that's important to them. Other uses would be around living inheritance. We see that quite a lot. So as we live older, kids get a little bit older, and looking to help kids get on the property ladder, customers looking to give an early inheritance to children where they can see they get the benefit of it, is a big one. And again, another large, significant use of the product would be around refinancing or switching a mortgage. More and more customers we see now actually coming into retirement still with a mortgage balance, and they're looking for solutions around refinancing that. And traditionally, other lenders, due to credit policies and how they structure their product, would find it difficult to finance somebody 65 and older. As Shane said, there's some increased options in the market, which is great and great to see for that age category. But again, we would see that as a big one, where people coming to retirement with reduced income, but they're looking to refinance a balance that's there already. So we would offer a lot of solutions around that. I suppose some of the other trends that we see in terms of the market in last year is we've seen about kind of over 15% growth in the product, mainly driven we've seen last year outside of Dublin. So it would have been Cork, Galway, particularly around kind of Connacht we've seen in terms of OBG, big presence in terms of the product, people looking for solutions. And what we tend to see now actually is one of the biggest drivers of people coming to it is referrals, friends and family, people more aware of the product, the different types of solutions that we have in place. And we have over 4,000 customers that we have on our that have taken out a mortgage with us since who are a Spry customer. So it's growing in popularity. I think it's growing in terms of people recognizing the type of product it is for a suitable type of life. Typically, the most common customer is a couple. After that, it's a single female. It's an urban product. Generally, follows house prices. So that's what people are borrowing against, and we'll touch on that. So it's Dublin, it's Cork, it's Galway, it's Sligo, it's big towns around the country where people have value they're looking to borrow against. And an average customer for us of last year was 72. So we tend to see it kind of a couple of years post-retirement typically, but again, all customers from 60, and again, there's no age limit. But an average customer is about 70, typical customers a couple. On average, people borrow about €100,000, but a typical loan size is maybe a little bit less, maybe about 80,000. And most people borrow about 80% of what they qualify for. So again, one of the key things and one of the important pieces that we touch on about independent financial advice is that people borrow for what they need rather than what they qualify for. So again, getting some of that advice and insight into the products and the features is crucial from independent advisors like OBG. Again, some of the trends would have been, we've seen last year there was a slight uptick in terms of new products around home improvements, which I outlined. And again, we offer a green loan, which is a discounted interest rate loan for those products if people are using the loan to increase the energy efficiency of their home. So again, it was one of the most popular products last year. When we look at just what a lifetime mortgage is and how it works. So a lifetime mortgage is just that. It is a mortgage. It allows customers over the age of 60 to borrow against the value of their home based on their age. So customers can borrow a fixed percentage based on their age against the value of their home. So it starts at age 60 and 15%, and it has one additional percent for every year of age, up to a maximum of 40% for those customers 85 or older. All of our products are fixed rate products. So you know exactly how much your loan is going to cost over the life of the loan. And you have that rate for life in terms of a lifetime product. So a true lifetime product. You don't have to make payments. They're an optional payment mortgage, but people and customers can choose to make a payment if they wish, and they can make it monthly or quarterly or whatever how they choose to help them manage the balance over time should they wish to do so. But most customers don't, but the option is there for people to do so if they want. You know, it's a product that it's an important product for people in later life to be able to access that wealth that they have tied up in the value of their home. But it's not the only option, and people need to consider all the options open to them, whether that be our product or maybe another lender. So again, getting independent advice, taking considerations around downsizing, looking at their overall financial situation and how they best want to approach retirement and financial planning around it. We encourage people to talk about the product, talk about with family, understand if it is right for them. We encourage that. It's not required. And again, it depends where customers are at different stages in life. Customers, you know, just 60, 61, 62 tend to tell us that they will tell their children at a later date. Customers kind of 70 and a bit older tend to involve their children typically during the process. But it's very much individual where people are, their own circumstances. So we encourage advice, and we encourage independent financial advice. And independent legal advice is a requirement as you go through to signing your contract. So that is a requirement. When we talk about the qualifying rules, people often say, well, who qualifies for this? Well, it's all homeowners. It has to be on your home. And you have to be the registered owner of the property. The youngest customer needs to be 60. So if it is a couple, it is the younger of the two. So if it is 65-year-old and a 60-year-old, you would work the percentage of the youngest customer being 60. You know, it's your home. So it's standard houses, agri properties, etc. Commercial properties is something that we don't do. It against family homes. And the customers that would be entering the loan would be the nominated residents. So they have the lifetime right to reside in the property. If there are other people living in the property, that is fine. But those customers would not be nominated residents, and they would have no right to reside in that property after the customers either move into long-term care or pass away in their estate. So they must take independent legal advice or sign a waiver in that if it is their home. Typically that happens when there might be adult children in the home still, and they'd be made aware of the loan, etc. But again, they wouldn't have a right to reside in the property once their parents either pass away or go into long-term care. We talked about how much people can borrow. So our minimum loan size on our standard products is €20,000. Max amount is typically 500,000, but we do consider higher on a case-by-case basis. As I said, it's based on a percentage of the value of your home. So again, you know, typically we say there a typical customer age 70 can borrow up to 25% of the value of the home. And that is a maximum amount. So customers can borrow anywhere between 20,000 and whatever that maximum figure is. And again, we encourage people to borrow what they need rather than what they qualify for, but really take some good consideration and time to see what that right figure is for customers.
Yeah, just to go through, sorry, David, jumping in, just to give people an idea what they could borrow there. So, for example, the minimum values of houses has to be is 300,000 in Dublin, and outside of Dublin, it's 225,000, I believe.
Correct. Yeah.
So, for example, a client, two clients, they're age 75 and 72, and they have a value of a house of 500,000. In that case, the value of the house is 500,000. You look at the youngest person within the household, the registered owners, that'd be 72 in that case. So that's 27% they're allowed to take, the maximum they're allowed to take. So that would give them a maximum amount of 135,000.
Correct. That's exactly it. Spot on. So again, worked around the percentage of the youngest person, that'll be the maximum amount of loan they can take. Now, important to say as well that it is a lump sum product, so it is not to be drawn down over time. So a lump sum is taken. So careful consideration in terms of the total amount the customer wants. Shane, we often get asked by customers, is it possible to come back and take out some additional lending? It is, of course, but it is a second loan, and everything is reassessed at that time. So again, often we would see, customers might come into us at, say, 65 or 70, and might come in 10 years' time as well, looking for additional funds for care or living inheritance at that time. So again, as long as the customer and their property qualify as that time, they can, of course, look for additional lending. I suppose this is probably one of the more kind of key aspects that we try to talk to customers about and really inform them about, is that when we talk to customers about making a decision about releasing equity from their home, there's a couple of things that kind of impact on that. So one is the amount that they borrow compared to the value. Two is the interest rates. Again, they're fixed for life. So again, we can offer some certainty around that. Things we don't control, though, is future house prices. And how long somebody's going to have the loan. So in terms of how long they might live for, etc. But really in terms of borrowing the amount and the interest rate, if you're borrowing it earlier and you expect to have the loan for 10, 20, 30 years, the effective interest, if you're not paying any payments, will increase the loan over time. These type of products are often called a reverse mortgage, is that they go up rather than go down. So if customers are taking out, 100,000 euro, for example, against a 500,000 euro home, and they choose not to make a payment, that loan will increase over time. If they choose to service the loan and keep the loan flat, pay the interest off every month, the loan will remain flat. And if they pay more than the interest, which they can, of up to 10% of the amount borrowed per year, the loan will decrease over time. So that optional payment feature allows customers to manage that balance over time. And we've a pretty good calculator on our website that helps kind of demonstrate that. And you can see the effect of, you can assume the property price growth yourself. You can put in 1% a year, 2%, 3%, whatever that might be. We tend to be quite conservative. We take it at 2% a year. I try to kind of talk to customers around that type of scenario. And then customers can see how much they would pay or if they wouldn't pay any at all. Now, if you're younger, the effective interest over time is greater, right? It has longer time for that to compound up. Older customers, that isn't the case. It's a product based on longevity. So that's maybe less of a consideration. But the calculator there on our website is really good calculator for people to really kind of visualize and see exactly the effect of the equity they have in their home over time.
No, I will say again, sorry, jumping in again, that's a key point. And when I'm talking to clients regarding the Spry products, a number of clients have said to me, listen, there might be a couple there, no children, nobody they're really concerned about inheritance point of view. So they often say to me, no, I'm happy not making any repayments on this. Others then might have more concerns about leaving money behind and so forth. And that calculator is a great tool to use. And just showing the impact of even making 100 euro, 200 euro per month, or 300, might not even have to be the whole interest payment, but you can make the whole interest payment, as you mentioned, which means your balance doesn't go up, and you can pay a little bit more even on top of that if needs be. And sometimes even family get involved in that and do that, is what I'm finding. But it's very flexible product in that regard.
Yeah, I think that's a really good point about the family piece, because what we've seen is on our older customers who come to us, maybe looking to use the product to fund care, etc. And they're having what I described, kind of grown up conversations with family about just um, the realities of their situation, and they're looking for to fund care. They want to stay in their home, and families can come together and say, look, we know mom and dad need the funds. We think it's a good product. We think it's right for them, but we are looking into the future in terms of from a inheritance planning and financial planning point of view. We wouldn't mind servicing the interest, so we might help mom and dad do that and keep the loan flat over time. So again, that's one of the things we point out to people in terms of one of the advantages of talking through families, looking at solutions. Generally talking about these products is probably better than not in terms of all kind of financial advice. So it's a really good important point. In terms of just the repayment of the loan, so again, how do they get repaid? Typically, it's from the sale of the home. So generally cases, it's the loan becomes repayable 12 months after customers either pass away from their estate, 12 months after they go into permanently cease to reside in your home, so you permanently go into long-term care, or if you just sell the home, okay, that you'd immediately have to repay the loan at that point in time. That would be sorted out by your solicitor as part of the normal conveyancing process. Again, key point out there is that it's 12 months after. Any of those situations, bar just choosing to sell your home, is a pretty significant life event. You don't need to be dealing in financial matters straight away. So there's 12 months, plenty of time to be able to sort things out between you and your family. So that's why we give that type of time frame.
Yeah, the other key point there, if you did take out the Spry finance, instead of trading down, you wanted to stay in your home, but you change your mind 5 years later, and you decide that something has come up, you can do. There's no penalty to do that, which is a key, again, flexibility about the product, is that you could sell your home and there's no penalty there.
Yeah, correct. So
you in the past was.
Yeah, so with our product, we have what we consider kind of downsizing protection built into the product. So there's no charge, early repayment charge for the product. So typically with all fixed rate products, there's a minimum term that customers must have in order to be able to do it. Now, as I said, just give people some context, we 4,000 customers. We have applied an early repayment charge once. We have many mitigating scenarios that limit the effect of it. So if a loan is held for 10 years, no matter what happens, there's no early repayment charge. Shane, as you rightly said, if somebody just sells the house after 2 years and decides, I'm actually going to trade down now, there's no early repayment charge. And depending in terms of the rate environment as well, it might mitigate if there being an early repayment charge at all. But that's a fairly typical scenario where somebody might get the product 60, 65, will think, well, I will trade down, but I'm not trading down yet. I'm 60, 65, could still be working. I'm certainly not old to be thinking like that. Want to have the house, enjoy it with my grandkids, etc. But may choose to trade down in 10 years. And at that, there is absolutely no cost to do that. It's devised that way in terms of to allow that for our customers.
Perfect.
This is a really important pillar of our products. I think something we think is crucial in all of the products. Wasn't necessarily provided by other lenders and other providers of this type of product. Spry Finance provides a no negative equity guarantee on all of our loans. So what does that mean? Well, it means that you will never repay more than the value of the property. So this means that any negative equity risk is our risk, not the customer's. So in the event that a customer borrows €100,000, they choose not to make any payments, they have the loan for, say, 10, 11 years, and let's say the loan doubles at current interest rates. And there's a property market crash, 6 months before the loan is to be repaid. That's our risk, not the customers. You will never owe more than the value of your home. So and it's non-recourse to other assets as well. So even if there's other pension assets, other cash savings, anything like that, the loan is linked to the property only, and that negative equity risk is ours, not the customer. So we think this is an important pillar of these products and an important one to have.
There's a great guarantee, and you also actually introduced a lovely, which I like, which is a lifetime inheritance loan, I believe.
Yeah, so this was again when we talk about some of those factors that we talk about in terms of affecting future equity in the home. One of them being house prices and future house prices, and we don't have a crystal ball, so we can't forecast them, and we don't know how long people are going to have the loan for. Right, that's up to them and life and circumstances. But what we were able to do is working with some feedback from customers and looking for some solutions for them. We worked with funders and we had a product, the guaranteed inheritance loan. So what this enables customers to do, that if they're concerned around making sure that they say, look, I just want it guaranteed, that I have X amount equity in the property always, that I want to be able to leave to my estate for my kids, grandkids, or use for other purposes such as funding future care needs, etc. We have that. So that place will ring fence 20% of the sale of the home, no matter what. So again, in that scenario of, say the house is worth 400,000, and let's say the loan is 400,000. If you have the guaranteed inheritance product, 20% of that is ring fenced. So 80,000, if the house is sold, 80,000 goes to the estate. The loan is 400, but only 320 then is realized. Again, that's our risk, not the customers. So it ring fences a certain amount of equity always for the customer for future needs.
No, I do. I like that. Yeah, it gives a guarantee at least.
Yeah, just to give an overview just of the application process. So for us, in our process, it's pretty streamlined, but we like to give people we like to give people space and time to be able to make the right decision for them. So customers, in our case, will either go to one of our 4 partner brokers, one of them being OBG, or come to ourselves direct. And they have a meeting with Shane or one of the consultants, and they will produce and have an initial meeting and produce the fact find. A statement of suitability is produced then to say, well, actually, we think this is the right product for you or not. That's a bit of financial advice you can have with Shane and the team. And ultimately, then an application is submitted into Spry, typically from start to finish, on average, giving lots of buffer time and space for people to have conversations with family, financial advisors, etc. Consider everything. We kind of say it's kind of 10 to 12 week kind of process with lots of buffer time in it. But once people are submitting an application and they're lined up with solicitors, etc., in terms of the conveyancing process, generally you're kind of talking kind of 5 weeks from submitting an application.
Very good. That's great, Dave. Yeah, thanks a million. You went through all that. It's very clear and plenty of information for people, hopefully, to really understand the product. And that's the key point. I just think, maybe many years ago, there was a bit of inflexibility around lifetime products. But it just shows the flexibility within that product between being able to pay off the negative equity guarantees and so on. Questions wise, I know I've had a few in already, so I might just run through that. Now it may cover off some of the stuff we've already talked about there. So again, the first question was, how long does the process take? And I suppose I know myself from talking to customers and dealing with them, if everything is in order, and as you mentioned, particularly solicitors are lined up, there's no issues here with folio maps and stuff like that, then you'll get it all done within the 5 or 6 weeks if people want to do that. Sometimes solicitors can be a little bit slower at times if they're not familiar with the product, but overall it is taking around that, but factor in, the 8 to 10 weeks is what I would tend to tell customers. Again, next question there would be, I have an investment property with no mortgage on it. Could I take the loan out on the investment property instead of my private house?
Yeah, that's a great question, and one we've had pretty consistently last year. And as a result, we brought out 2 new products. One was on a second home, and the second was on a buy-to-let product. So this allows customers to get access to a lifetime mortgage product on their buy-to-let. The loan to value table that we looked at earlier in terms of 15% is a little bit different. So again, it's on our website, some of the material, or talk to Shane and the guys about it. But essentially, it allows customers to access the product on a buy-to-let, and we found it quite interesting, and so far in terms of the type of customers who are really interested in it. So again, allowing, this is probably an investor type customer, but we're kind of attracted to no negative equity guarantee. As you can imagine, from an investor point of view, it was quite attractive to protect downside. They were attracted to fixed interest rates. So again, that rate is slightly higher, but very competitive for the type of product at 6.95 for a buy-to-let mortgage rate that has an optional payment element. And we found lots of customers who were landlords, only 3 or 4 properties for the customers we've seen so far, who were renting it, but were looking to release some funds to do some renovations, etc., that they required works in the property. They had looked about selling the properties, but actually had, on financial advice with this product now available, actually said, well, actually, we might be better off borrowing against it and avoiding capital gains tax in any of the sales and maintaining cash flow on the property. So again, it's about getting, for us, it was about increasing the choices for those over 60 in the market, having more products available for people, more choice, and this gave some people some more options. So it's thankfully, touch wood, has gone pretty well. There's lots of interest about it, and it just gives some people some additional options and choice for those over 60.
No, that's brilliant. Thanks, Dave, for that. It's a great option. Next question. Yeah, can someone still get the loan if they had credit issues in the past?
Yeah, yes, you can. As I kind of highlighted on the kind of uses that we would see, a strong use case for one of our products is refinancing an existing mortgage. We refinance customers from all lenders, whether it be credit unions, high street banks, AIB, Bank of Ireland, or any of the credit servicers like Pepper or Mars, etc. And often in those scenarios, people might have had, a bump on their CCO record, and or they might have had some of it warehoused, or they might have missed a few direct debit payments. That is not a automatic no for a loan from Spry Finance. We recognize that often our product is actually solving the solution, what they're looking for, providing a solution for what they need. So we'd have many customers who have had an issue on a CCO in the past, but are using our product as a long-term solution to that and are using it to refinance. So we would often see customers who have a CCO track record, but that's not an issue. Our loan, where they aren't required to make monthly payments, could be a solution for them going forward. So we would refinance a lot of customers like that.
That's lovely. Listen, thanks very much. Yeah, I think we're just over our half an hour, so we'll leave it there. What I'd like to do is, first of all, is thank yourself, David, for joining the webinar this evening. It's great to have you here to be able to explain to our clients, I suppose, the ins and outs of the later life lending product, and Spry are the main lenders of later life lending in the country. So thanks very much for that.
No problem. Thanks very much. And thanks very much for having me on.
And lastly, I suppose I'd like to thank everyone who joined. Again, if you want to talk about your own case, your own particular case, and the ins and outs of that, feel free to contact Spry directly or contact ourselves. All the details are there. Again, are on the website. You can book in a meeting or chat. And it'd be important just to get the lowdown on your own situation. Do you qualify? Is it suitable for yourself? And again, we can take you through the market and the choices there for yourself. So thanks very much to everyone this evening, and look forward to doing this again. Thank you.
Thanks so much, guys. Appreciate it.